Hello everyone, my name is Sarah Hello, and I'm going to explain to you the difference between FOB destination and FOB shipping point. First, FOB, that's free on board, okay? FOB destination, okay, you have to pay attention to the word destination. So that means that whenever the goods reach the destination, the seller removes the goods from its inventory and the buyer or the purchaser records the goods in its inventory. I'm gonna give you an example. China is selling goods to UAE. The cost of goods sold in China's books is $700,000, and the selling price is $1 million. Now, China is using the perpetual system, and UAE is also using the perpetual system. So, in this example, the goods reach the destination on the 20th of December 2021 in the future. Okay, so what's the journal entry that is to be done in the books of China, and what's the journal entry that is to be done in the books of UAE? First, this is China, definitely on the 20th of December 2021, when the goods reached the destination UAE. So China is going to remove the goods from its inventory. We know that the inventory is a current asset, so it decreases on the credit side. So I'm gonna credit the inventory for the amount of $700,000, the cost, definitely not the selling price. And I'm gonna debit a cost of goods sold because this inventory was sold. Okay, so that's also amounted to $700,000. What about the sales transaction that is to be booked? Definitely you're going to debit AR or cash, if it's a cash transaction, for the amount of $1 million. And you're going to credit the sales for the amount of $1 million as well. Now, what about UAE? UAE actually received the goods on the 20th of December 2021. So UAE is going to debit its inventory and credit accounts payable or cash for the amount of $1 million. Okay, so FOB destination, I want you first, whenever you are solving an MCQ or a simulation, to determine whether you are the seller or the buyer. So is this the seller? Is this the buyer? That's the first step, and it's very important. Second, read carefully and pay attention to the dates, okay? Because the examiners, they might try to trick you when it comes to the dates. So pay attention to the dates. For destination, whenever the goods reach the destination, the seller removes the goods from its inventory, and the purchaser or the buyer records the goods in its inventory. Who bears the shipping costs? Definitely that's the seller. Here in this example, that's China who's going to bear the shipping costs. Okay, the shipping costs in this example are freight out. What's the meaning of freight out? It's a selling expense in the income statement of China. So if the goods if the selling price of the goods is $1 million and the shipping fees are amounted to $10,000, China is going to pay the $10,000 shipping fees, okay? It's going to debit freight out, which is a selling expense in the income statement, you know, SG&A, that's the S, selling general and administrative, that's the selling expense freight out, and China is going to credit, let's say, cash or accounts payable. If goods are damaged at point 1 here at this point, then who bears the loss? Definitely that's China who's going to bear the loss. That's the seller, because the goods didn't reach the destination. As long as the goods didn't reach the destination, that's the seller who's going to bear the loss. Okay? So that's when it comes to FOB destination. What about FOB shipping point? FOB shipping point, it's a bit different. We have the same example. China is the seller and UAE is the buyer. But here, when the goods reach the common carrier, not the destination, when the goods reach the common carrier, when I say common carrier, it means ship, airplane, railroad, etc. Then the seller can remove the goods from its inventory, and the buyer or the purchaser will record the goods in its inventory. Okay, so same example, we had cost of goods sold of $700,000 and a selling price of $1 million. But here it's not FOB destination, it's FOB shipping point. So let's assume that the company is in China. Okay, put the goods here on the ship. I know that I drew in a very bad way. That's a ship, okay? That's the common carrier. So if the goods are here, the boxes are here, then China will remove the goods from its inventory and UAE will record the goods in its inventory. Noting that UAE, the company in UAE, didn't actually get the goods or receive the goods, okay? The goods are on the common carrier. They are not in UAE. But even though, because it's FOB shipping point, then UAE has to record the goods in its inventory. So here the date is, I don't know, August 27, 2021. Okay, the goods are on the common carrier. So on August 27, 2021, China has to credit its inventory, debit its cost of goods sold for the amount of 700K, and record the sales transaction, debit AR or cash, and credit sales for the amount of $1 million. And UAE has to debit its inventory on the 27th of August for the amount of $1 million and credit accounts payable or cash. Okay. Now, in the previous example for destination, we saw that China is the one who bears the shipping cost. But in this example, that's the buyer, which is UAE, who's going to bear the shipping costs. And the shipping costs in this case are called freight in. The freight in are included in inventory. You have 4 in. Okay, so always remember that freight in is included in inventory. Let's say that the shipping costs are amounted to $10,000. We said that if this is FOB shipping point, then the buyer, which is UAE, is going to pay the shipping cost. So the $10,000 is going to be paid by UAE. UAE recorded inventory of $1 million, but since UAE paid shipping cost amounted to $10,000, that's freight in, it's going to be included where? In inventory. So instead of putting $1 million, you have to put $1,010,000 debit to inventory and definitely credit, cash, or accounts payable. Now, if goods are damaged before reaching the common carrier, definitely China bears the loss. But if the goods are damaged after reaching the common carrier, that's the buyer, UAE, who bears the loss. That was everything when it comes to FOB destination and FOB shipping point. I want you to read your MCQs very carefully. First, determine whether the company is the seller or the buyer. Okay, you have to see, am I reading the information from the perspective of the seller or from the perspective of the buyer? That's first. Second, pay attention to the dates. Okay, third, study very well because you're going to pass your CPA exam. Thank you for watching this video.